All right, now this is a government boat. It is a fire boat. Awesome, right? It also does the ice breaking in the wintertime for the ferries to be able to get over to the island. Kind of reminds me of the economy. Do you see this giant hose here that they have? They have another massive gun in the back. So they patrol up and down the waterfront. Any building that is on fire, they can throw water onto it, or any boat. This is kind of how the government operates with the economy as well. If the economy is on fire, they come in and throw some water on that fire to keep it only at a slow burn. They want to do that by throwing up interest rates. So as interest rates go up, they're spraying water on it. As interest rates go down, they're throwing a log on it. This is pretty cool, right? So this is a massive marine station. It's next to the police station, which is also the biggest one in Canada. We've got a lot of news that's going on right now, like tons. And I think people got to pay attention to what's happening to them. The US Fed raised the interest rate by 0.75%. So in Brampton and Mississauga, the interest rates now have caused the prices to drop 35 and 40%. So if Canada follows suit to what the US Fed does, which is most likely, we're going to hit there, we could be in for some serious trouble. Okay, so if they're down 40% already, that's of trouble. Now, if Canada follows suit, 92% of the time we always follow. So if we raise it 0.75% interest rate, home prices drop 7.5%. So if the homes have already lost 40%, you add another 7% to that, we're getting close to 50% drop in prices. So what happens? What is the mechanics behind all that? So if you take a home and you normally buy it and it's over $1 million and we got to put down 20% on that home, just imagine this, $1 million home, 20% down, so you put $200,000 down, an $800,000 mortgage. Follow me so far? Okay, so if you do that, and now the home price drops to say $600,000, you now have an $800,000 mortgage on a $800,000 home or a $600,000 home. The bank does not want to lend that much money. The bank is in anti-risk business. They don't want that trouble. So they have an option in the fine print called callable loans. So they can call you and say, now that your home is only worth $600,000, we're only willing to lend you $500,000. And then you say, well, I owe $800,000. What am I supposed to do? And they go, well, you have 10 days to come up with that $300,000, or else we can start proceedings on your house. Now, this hasn't started yet. We haven't hit that point yet, but it is the right to do so, and it could happen. So anybody who bought homes in the last 2-3 years, we could be in that position. You could be getting into some trouble. This is the 401 building. I love this building. It's a tiny little building on the water. I think it's probably the best real estate on the waterfront. But this is the crux. We could be running into this situation where the banks start calling all these loans if the banks get in trouble. And if you see their profits dropping, they could start that. And if they start that, woof, I mean, massive, massive trouble. We're talking not just like 10,000 homes. We're talking it could be hundreds of thousands of people. And where is that going to hit the most? It's going to hit the highest priced ones. So people in Vancouver, Toronto, that have bought in the past 2 years could be in the biggest danger spot. So we're in this situation. Rents are the highest they've ever been. So remember, home prices usually rocket up first, and rent lags normally about 2 years behind. So it takes time for people to be moving out of the units and re-raising the rents up to where they have to go. So now what we're seeing in rent prices is that they're going up, but in response to the home prices going up in the past 2 years. Now, we should still see rent prices go up because demand is absolutely crazy right now. But if you're in a lower priced home, you're not seeing the prices go down. I mean, the 1-bedroom condos aren't going down. The 3-bedroom townhomes are not going down because it's where everybody can downgrade from a single family home. So the demand is still there at the lower end, but at the higher end, the higher you go, the less demand there is. So that's an issue. The other issue that we're running into right now is, what are you going to do with interest rates? Now, everyone is confused. I'm getting a lot of emails about this because in the same day today, we are getting the same articles saying interest rates are going up, and we're also seeing that mortgage rates are going down. How can they go up and down at the same time? Okay, it's very confusing, but just understand how this works. The central bank is the one that lends money to the bank, and then the bank lends it to you. So the central bank may lend it to the Bank of Canada, let's say, or the US Bank, the US Fed, is going to lend it to Bank of America or Bank of Montreal. Okay, so they'll lend it at 2% to them, and then they'll give you the mortgage at 5%. So the central bank wants their 2%, and the bank wants their premium. Say they'll add another 3% on that, just to be easy math. So the central bank has raised their rate by 0.75 in the US. So that's going to go from 2 to 2.75. The profit margin that the other banks, the Bank of America, Bank of Montreal, they were like before saying, we're wanting a 3% premium. Oh, I see it. This was not for being cool, guys. See all my sunscreen on here? This was because the sun was out. Now it's not out. The premium that the bank wants now is willing to take less. So imagine when you're going to sell the house, you can talk to your realtor and ask for a lower commission. And this is the same way. The Bank of Montreal, Bank of America, the guy who's giving you the mortgage, they're willing to take a lesser commission. So the same thing, the same instance could have two things being true at the same time. Interest rates going up and mortgage rates coming down. That's because the central bank is raising the rates while the intermediary bank that's giving you the loan is lowering their commission rates. That's how those two things could be right at the same time. And you're probably going to see that more and more. The central banks will keep raising it. They're saying they want to raise it up to 3.5% by the end of the year, but the actual squeeze on those banks giving you the mortgage is going to be going down and down because they're willing to take less and less commission. They're trying to generate some kind of money. So we have friends that are inside the banking, the mortgage industry, and those guys are laying off people everywhere. So the refinance market is dead. I mean, why would somebody take a 2% mortgage that they had last year and refinance it at 6% today? I mean, it's just not going to happen. So in the US, they've laid off tens of thousands of people. Canada, they're laying off tens of thousands of people. They're all going away. Banks in their mortgage industries, they're laying off a lot of the mortgage people as well. So you're seeing this over and over, that the industry is hurting. So they're going to try to generate some income to keep their employees, and they're going to be lowering the amounts that they're expecting in commission. So I think this is going to continue, you guys, honestly, that we're going to see that trend. And so if you're going to be investing right now, make sure that you're investing for a property that cash flows. Rents are going up and prices are going down, which is a great mix for somebody who's going to be buying cash. But if you were going to be buying cash, I'd be waiting. The prices will probably be falling through the fall and winter. If you look at any GDP expectations, they're saying that Canada, the US, we're tied at the hip, right? That they're expecting continued slowdown, and they're also expecting continued slowdown in the GDP numbers. This is very predictable, right? As they lower the interest rate, things get on fire. They start selling a lot. But when they raise the interest rate, everything is slowed down. It's like dumping water on a fire. So just be careful with what you're doing. Cash, wait. If you're thinking of selling, now's a good time to think of selling, you know? Oh boy, it's starting to rain. Look at this. Here we're talking about bad weather, right? Economy, gray skies. It's kind of literal, don't you think? So it's kind of confusing looking at all this news. But listen, they're now trying to change the definition of recession. Guys, we knew that we were in recession like in April, but the government doesn't want to officially announce it. Nope, guys, we need 2 negative quarters. Okay, now that we have 2 negative quarters, they're still saying, well, we're going to change the definition of recession. So technically we're not in one yet. These guys is a joke. So we got to do our own due diligence, right? We got to listen through it and not get gaslit by these guys. If you go to the hospital and you have a broken leg, okay, and you're like, I can't walk on my leg, it's broken, and you're in a cast, and they go, no, it's not, it's fine. Your leg is fine. No, it's not, it's broken. So don't listen to them. Do your own due diligence. Try and figure it out on your own. I mean, that is where you're going to make your most money, and take care of your family. I love you guys. If you like this stuff, just send it to one guy that you think that will help it. And please remember to like and subscribe to this. It's the best way to help me. Have a great day, you guys. Love you.